How's it going, everybody? And welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over our number one buy setup and our number one sell setup of the day. But before we get into that, we're going to take a look at something really quick that I'm really excited to share with you guys. And it's not COT data and retail sentiment. We'll get to that in a second. I want to show you guys our brand new StockBox. This is our brand new market scanner from A1 Trading, and whereas the Edge Finder is more focused on Forex trading, it also has indices and commodities like the S&P 500, UK 100, Nikkei, gold, silver, oil, things like that. The StockBox is more focused on actual stock companies. We have GE, Tesla, Lululemon. We have so much stuff here. You can see all these different sectors that we're tracking as well. Utilities, technology, industrials, consumer, healthcare, financial. There's so much stuff here, and it's not just stocks, although we do have a lot of stocks in here. We also have sectors. So if you're a stock trader or a sector/ETF trader, the StockBox is definitely for you. You can see that we have real estate in here. We also have S&P and NASDAQ, similar to the Edge Finder, but we have banks, energy, healthcare, semiconductors, industrials. We have so much stuff here in the StockBox, and we are constantly going to be updating it and adding to it, similar to the Edge Finder. And the best part of all of this right now, both the Edge Finder and the StockBox are 40% off right now for Black Friday. Our Black Friday sale is the biggest sale that we do all year long. So the Edge Finder, the StockBox, our Discord service, and Pulver Alerts, all available now for 40% off. You can go to our website, a1trading.com, and use promo code A1YT at checkout to get 40% off your entire order. No matter what it is, what you buy, everything on the website right now, 40% off. So go check out the StockBox, go check out the Edge Finder, the Discord, Pulver Alerts. We even have TradingView trading indicators on there. All of that stuff is 40% off right now during the month of November. Promo code A1YT. With that, let's go ahead and start off like we normally do by checking out COT data before we get into the actual top buy and top sell. So COT data right now showing us that the Swiss franc is the most shorted asset from COT or institutional traders right now. 86.91% of open Swiss franc positions right now are being shorted. The Canadian dollar not too far behind it at 85.6%, and bonds right now, the US 10-year Treasury yield bonds, are also very shorted from institutional traders. Then there is a big jump up, and we see a lot of things hanging around this 50-50 mark. One of those things being the dollar at 48.84% short, 51.16% long. So COT traders are very divided on their opinions on the dollar, whether to go long or to go short, as they are with a lot of things like Bitcoin. The euro is up there, the S&P 500, the Russell, the yen, all of these things very close to 50-50. But as we get up towards the top, the South African Rand, ZAR, is our most long asset percentage-wise when it comes to what institutional traders are going long on. 93.04% of open positions on the South African Rand at the moment are long positions, followed up by silver and then gold. Gold sitting at 83.1%. Let's check out the latest weekly COT filing. Here we can compare last week's COT data to this week's COT data, and we can see the total number of long and short contracts open on all of these different assets here, as well as the change long and short, again, for all of these assets here. And then the overall, of course, long and short percentage, but most importantly, the net change percentage. This is the percent either up or down that it moved last week to this week. So the biggest mover to the upside, the most long net change asset, was the Nikkei. We saw 1,050 long contracts added and 533 short contracts taken away. Overall, it is 67.37% long, and it had a net change percentage of 6.53%. On the flip side of things, it seems that COT traders are buying into the Japanese stock market, but selling the Japanese yen. We see that right now we had 7,321 long contracts taken away, 14,018 short contracts added. Overall, it is still pretty close to 50-50 in terms of the total long and short percentage. You can actually see those numbers here. This is the total number of long contracts open. This is the total number of short contracts open, but a big difference in long contracts getting taken away and short contracts being added. Overall, the net change percentage was negative 7.87%. So if you'd like to pause the video to take a closer look at this, feel free to do so, but I'm going to go ahead and move on to retail sentiment, and let's see what day traders are buying and selling. Starting off like we normally do by taking a look at the US dollar pairs first. And right now, NZD USD, Aussie USD, USD CHF, and Euro USD are all favored up above 60% on the long side by day traders, or the overall crowd of traders. And so those are getting bearish indicators. USD CAD, on the other hand, 76% of day traders right now are shorting USD CAD, and that is getting a bullish indicator for us. Check out minor currency pairs next. We have this list here, not too long: CAD CHF, NZD CHF, Aussie CHF, and Euro Pound. These are all favored over 60% on the long side from day traders. But this big list here, all of these are favored over 60% on the short side by day traders at the moment. So these are all getting bullish indicators for us. These four are getting bearish indicators for us. We'll finish up with our indices, metal, crypto, and commodities, everything else. And right now, day traders not favored over 60% short on any of these things, but they are favored over 60% short on, well, most of the list. We see Ethereum on here, iron, copper, oil, Bitcoin, platinum, silver, the Russell, the UK 100, the NASDAQ, the Nikkei, and gold. Day traders are buying into all of these things right now. Going back into top setups, I'm going to remove any neutral biases that we may have, and let's see how many bearish or bullish. Well, we have no bearish biases today, only bullish biases. Keep in mind, no very bullish biases, but we have 1, 2, 3, 4, 5, 6, 7 bullish biases nonetheless. One score of +5, 3 scores of +6, and 3 scores of +7. So I guess I will take a look at 2 different bullish biases today, and I guess we'll go with the highest scores here. So we'll run a yen cross, we'll run NZD JPY, and we'll run Euro CHF, so that we're getting data on 4 different currencies: the New Zealand dollar, the Japanese yen, the euro, and the Swiss franc. And we'll take a look at 2 different bullish biases, both with scores of +7. So I'm going to go into data scanners, Forex, and scroll up to the top. And I said that we would look at, did I say Aussie or NZD? We're going to look at Aussie JPY because it's up here at the top.
This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the StockBox, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the StockBox gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The StockBox, the Edge Finder, Pulver Alerts, and the VIP Discord community, as well as our Trading View indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more in the description below. Again, 40% won't last forever, so take advantage of this huge sale. StockBox, Edge Finder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
Like I mentioned already, a bullish bias score of +7. COT data is a score of +2. Retail sentiment a 0 or neutral score. COT data right now on the Australian dollar and the Japanese yen not favored over 60% in either direction, so it's not getting scored there. Where that +2 score is actually coming from is the fact that right now, from last week to this week, we can see the weekly change, and we know that the Japanese yen was the most shorted weekly change, again, from last week to this week by COT traders, and the Australian dollar had a positive weekly change. So from last week to this week, COT traders buying into the Australian dollar and selling the Japanese yen. Again, retail sentiment not favored over 60% in either direction. That is why we're getting a 0 or a neutral score here. It is just too close to 50-50 for us to call it one way or the other. Yes, technically it is slightly favored on the short side, but we want it to be more clear and obviously trending in one direction or the other before scoring it that way. Seasonality is a score of +1, and we can see here that historically speaking, in the month of November, Aussie JPY does typically trade higher when averaging the last 10 years together. Our trend reading is a score of +2, and we can actually take a look at that by going into the price forecast tab and getting a look at the daily chart. So I'm going to search AUD JPY, pull up the Aussie-Yen chart, and overall towards the end of October we did see it start to climb higher, dip down a little bit, and then kind of just consolidated here from October 25th to October 30th. Not a ton of movement, but from yesterday to today we have seen a bit of a sell-off. Price forecast though is predicting that it will bounce back and start to move higher here in the next couple of days. We're going to finish up with our fundamental data. Lots of neutral fundamental data. Manufacturing PMI, services PMI, retail sales, inflation, and interest rates, all 0 or neutral scores, canceling each other out. GDP and employment change both have positive scores. The unemployment rate is a -1 score, however. Now, taking a look at this economic data here, if you want a full breakdown of all of the GDP information, the services PMI or manufacturing PMI, retail sales, inflation, employment data, we have all of that in all of these different fundamental data tabs here for all the currencies that we're tracking, all those different countries. We have all of that labeled here, but in the scanner page, we are keeping it short and simple and letting you know whether or not a currency or a country met, missed, or beat the forecasted fundamental expectations. So the Australian dollar is listed first. That is going to be our A column here. The Japanese yen is listed second, so that is our B column. We can see that the Australian dollar met its GDP expectation, whereas the Japanese yen missed its GDP expectation. That is why we have a +1 score here. Positive for the Australian dollar, or rather kind of neutral for the Australian dollar, but negative for the Japanese yen. That is why we have a +1 score. We can see that they both beat in manufacturing and services PMIs, and they both missed when it came to retail sales. So none of them really have an edge one way or the other. These all beat forecasted scores. These both missed forecasted scores. CPI, we can see that in Australia, the CPI was forecasted at 2.9%. It did come out at 2.8%. Whereas in Japan, the forecasted CPI was 2.7%. It came out at 2.5%. So as we know, inflation going lower typically isn't great for a currency. Higher inflation, not too high inflation, but inflation steadily ticking higher actually does add to the strength of the currency. So this was a negative thing in this case for the Australian dollar, but a positive case when you're comparing the Australian dollar to the Japanese yen. Finally, we're going to take a look at the employment rate, forecasted at 4.1% in Australia, and that is what it came out as. But in Japan, it was forecasted at 2.5%. It came out at 2.4%. So there we go. There is all the data and numbers backing up that +7 bullish bias on Aussie JPY. The other pair that we said that we were going to take a look at was Euro CHF, also a bullish bias, score of +7. COT data and retail sentiment, both 0 or or neutral scores. So similar to what we saw with the Aussie and the yen, the euro is also creeping around that 50-50 mark. So it's really not favored one way or the other. The Swiss franc, though, is heavily favored on the short side by institutional traders, but both weekly changes were negative for both the euro and the Swiss franc. The COT traders are both selling them off when it came from last week to this week, so that is kind of canceling each other out and giving us our neutral score there. Retail sentiment, again, same thing. It's not favored over 60% one direction or the other. It is too close to 50-50 to call, so we are giving it a 0 or neutral score here. Seasonality, we see that it has a negative score here, but a +1 score here. So I'm curious to see if we go to month seasonality scores and we check out the Euro Swiss pair here, what this has to say. So yeah, in the month of November, we do see that it is very, very close to being neutral, negative 0.7%, but it is coming up as a +1 score here. So we're going to ignore that for just a second. That should probably be a 0 or a -1 score, but trend reading is a score of +2. We're going to take a look at price forecast to see how this thing has been trending over the past couple of weeks. Euro CHF. And there we go. We can see that towards the end of October, this thing again wasn't moving around too much. It had a bit of a dip here from October 21st to October 24th before it rose just slightly and then kind of consolidated for a few days. But from October 29th to the present day, November 1st, we have seen that it's been on a pretty steep rise, and price forecast predicts that is going to continue to move forward from here. Finishing up with our fundamental data, again, we don't see a ton of bullish fundamental data. Most of it is actually neutral. GDP, services PMI, manufacturing PMI, employment change, and interest rates, all 0 or neutral scores, but we don't see any negative fundamental data. Retail sales and unemployment rate are both scores of +1. Inflation is a score of +2. So again, same thing here. We are looking to see if it beat, met, or missed the forecasted fundamental data expectations. The euro is going to be column A because it is listed first. The Swiss franc will be column B because it is listed second. So we can see that both countries beat GDP expectations, beat manufacturing PMI expectations, missed on services PMI expectations, and the euro met retail expectations, whereas the Swiss franc missed retail expectations. CPI forecasted at 1.9%, but actually ticked higher up to 2%. CPI in Switzerland was forecasted at 0.8%, but ticked lower down to 0.6%. Finally, the unemployment rate in Europe was forecasted at 6.3%. That is what it came out as. And in Switzerland, it was forecasted at 2.4%, but it came out a little bit higher at 2.5%. So there we go. There is all the data and numbers backing up that bullish bias score of +7 here for Euro Swiss. I want to remind you guys one more time that right now we are doing our Black Friday sale, which means that you can get the Edge Finder, the StockBox, or any of our Discord services for 40% off right now. I'll show you really quickly just a little bit on how the StockBox works. We do have other StockBox videos both on the A1 channel and Trader Nick's channel. If you are interested in those, you can go check them out. But basically, we are giving them financial scores, trend scores based on how they're actually moving in the market. And the 13F score is right here. This is our hedge fund tracker. You can see all of these different hedge funds that we're tracking. We are tracking a lot of them. They are releasing what they are buying and selling quarterly. We are plugging all of that information into the StockBox so you can actually see what different hedge funds are buying and selling on a quarterly basis. So for example, like Berkshire Hathaway here, this is Warren Buffett's famous hedge fund. And we can see what he has been buying and selling. So in Q1 of 2024, the biggest position that he had was Apple stock. In Q2, his biggest position is still Apple stock, but you can see that he sold off a bunch of Apple stock and added to other things here, like Coke, for example. He was sitting at around 24.4 million shares of Coke, but he upped that by about 1 million. So little things like that, and you can actually see this wheel here breaking down his total portfolio percentage. So it is a really cool thing. Again, financial score, trend score, 13F score, and insider score. The insider score isn't listed for everything, but where it is listed, what this means is whether or not CEOs or big major people in the company, whether or not it has been reported that they are buying and selling shares of their own company. So if it's negative, that means a CEO or a high-ranking official is selling shares of their own company. And if it's positive, that means that they are buying shares of their own company. That's our insider score. Top sectors works similarly, but we also include fundamental US data like GDP, manufacturing, services, PMIs, retail sales, CPI, employment change, unemployment rate, and interest rates. So like today we had the NFP, which came out as expected, but the jobs added came out far, far, far worse than forecasted, which jobs not being added is not going to be great for the stock market, which is why all of these have a -1 score here. Obviously, certain sectors are more affected by things than other sectors. For example, like real estate here is really affected by the rate of inflation more so than something, say, like the NASDAQ, or semiconductors aren't quite as affected by inflation rates than real estate, people buying houses, people buying businesses, things like that. So some are weighed more heavily than others, but yeah. That is the stock box for you, and if you want it 40% off, you can do so right now on our website, a1trading.com, promo code A1YT at checkout for 40% off the stock box, the Edge Finder, or any of our Discord services.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.